We're going to be talking about the Fed rate cut, what this might mean for investment markets. And there's a lot of news to break down. So we're going to bring in a market analyst that I think you guys are going to want to listen to. She's got some good insights on where this market is going. You guys are going to love it. Based on what you're seeing right now, and granted, we'll talk about government data being pretty much absent right now for Chair Powell to be able to kind of assess this. How does the Fed play this going into December, just around the corner?
It's really difficult because you're talking about a situation where we have potentially, I guess the best one singular word to describe it would be stagflation, Paul. And the reason for
Yep.
that is that we have such upward momentum in markets, yet on the retail or on the invest or on the actual home household side, we have a lot of consternation to the downside, right? We have a lot
Mm.
of issues, especially if you're not in the top, even 5% of the economy. So then you combine that with a government shutdown that has obviously taken away all of their official data that they rely upon, other than they recalled the BLS staff to give us the Q3 numbers because they had to have that for Social Security to adjust the
Right.
COLA that has to be announced by law every November 1st. So we got limited September and Q3 data. And so you've got a Fed that doesn't have this data. Now, if the government reopens and they can start getting this data back, that's great. But we're talking about data that has to be assessed and basically processed by the December meeting, and it's an early December meeting because it's
Mhm.
6 weeks, obviously, from the end of October meeting. So we're talking about December 10. And if you look at the Open Market Committee tool, we've only got a 65% chance right now of a 25 basis point cut from the
Mhm.
3.75 to 4 Fed funds range that we have right now. And so Powell, when you look at the actual vote at the October meeting, you had a 10 to 19 situation. So a very, very slim majority that authorized the cuts for October. And so you do have a lot of hawks in the Fed right now, really super concerned that the market is taking off at a tear, and yet everything else is still very depressed, and the weakness in the jobs. Now you're looking at Fed officials actually quoting private payroll. They're quoting ADP, and they're quoting, they're quoting all of the private. Oh, we've lost 135,000, 138,000, 153,000, depending on what you want to look at from October. And that's a problem because they don't have anything to combat that and say that's not the case. And so that would lend to accommodation, right? That would push the Fed in the direction of let's accommodate, let's help the labor markets, let's help recover.